Get Rich Slow with John Wolf. Hey, I recently made a video about how the housing market is super hot. People are putting in multiple offers, 15% over asking. Let's waive all the contingencies. And I told you how I wouldn't feel comfortable doing most of those things. Not that it's necessarily the wrong decision for you, as long as you know what you're waiving and what it could mean. But I wanted to make a video on the positive end, or like, what are some different things we can do if you're not an all cash buyer, nowhere near an all cash buyer? What can you do to be more competitive? And I brainstormed with one of the best real estate agents I work with, and here's a couple ideas I came up for. One of them is, especially if you're a lower cash available, like standard FHA buyer, or just a first-time home buyer where 5% down is a stretch, maybe even 3% down is a stretch, and you are doing what has been sort of super normal, and I totally recommend just asking for seller credits to pay your closing costs. But that's, of course, if you ask for $5,000 seller credit, you're really decreasing the purchase price by $5,000 for what the seller actually gets, right? So we can actually avoid that in a different way without the cash coming from your pocket. And this is related to my video on fees, rates, and points. So check that out if you want a deeper dive. But basically, today there are phenomenal interest rates, and there is a very good chance that we might be able to get you a still very good, but maybe higher interest rate, and get you a lender credit of $6,000, $7,000 or whatever amount we need, such that you don't really have any closing costs other than the down payment, and you didn't have to ask the seller. So you are offering the seller more money, and also when you put in an offer asking for a lot of seller credit, you do project the message that you might be cash poor, which does mean like, hey, I talked in the other video about appraisals coming in low, but it's not common. But what if the appraisal comes in $2,000 low? Are you going to blow up the deal over that? Are you okay meeting in the middle? Could you even do the whole thing? Well, the seller might think about that, and in fact, they should. And if you're asking for $8,000 seller credit, you're kind of broadcasting the idea that if there is something that comes up, the buyer is not going to be able to fix it with cash on their end. Now, I put in an offer to purchase a house in December, and I asked for $8,000 seller credit just because I wanted to decrease the cash coming out of my pocket. It had nothing to do with the cash I had available. And, whenever it would be available to, one way or the other, take money and put it in a 3% or less interest rate loan instead of coming out of my pocket, I'd still do that. I have another thing that might make your purchase transaction look a lot more competitive, but it'll take a little bit more work and a little bit of trust. Thankfully, I work really hard to earn that trust, and there are enough real estate agents around town to believe me if I tell them this. So the other thing that you can do to look good is be fully pre-qualified, pre-underwritten, which is not normal at all. And we can even offer potentially like a 10 business day closing timetable, where we can close only contingent on the appraisal turn time, really. So, basically closing in 2-3 business days plus what it takes to do the appraisal, and we can rush the appraisal. So that's the other thing we can do, just so you have an idea of what that would look like. I would do a normal, ask you all the questions, property, income, assets, credit, ask to see your basic paperwork on that end, just to make sure that, you and me understand what the question and have the same understanding about what your income is. Then I pre-qualify you. And at that point, if you want, we can take like a full mortgage application, all of your paperwork, everything, just minus property, and we'll just fill in a value we think the property is going to be, and actually send that to underwriting. And then when you get in contract, we can tell the seller, I can call up the listing agent and tell them like, hey, they're not pre-approved, they're underwriter approved. The underwriter gave them a pre-approval of above the purchase price and taxes that you're talking about. And I am confident that pending the appraisal, which we'll immediately order as a rush, we can close in about 10 business days. That will blow the socks off of most sellers. Just so you know what's normal, right now 30-day closes are good. It's difficult to do 30-day closes. And if I can put you in the position with authority to offer a 10-day close, or maybe a 15 if we want to play it a little bit safer, then there is a very good chance you might be the right fit for that seller. I know personally in December, I closed 4 deals that for other lenders that were sale failed by other lenders. And the saddest thing about that in general is, and luckily the sellers stayed on because I looked over their situation really quick and was able to assure those sellers that, yeah, this is a really financeable person. I don't know what those other people were doing wrong. And with that, make everybody happy. But it doesn't always end that way. But anyways, if you have any questions, if you want to get pre-qualified, maybe even full pre-underwritten, please reach out. John Wolf at htlenders.com, my cell phone number. And hey, put a comment or send me an email. Have an awesome day. Subscribe, like me if you like me. Bye.